Most people get pretty nervous when they see stocks down, volatility up, but you say everything's good. How is that? How do you maintain your cool here?
Well, you know, Becky, this is the fourth time we've been down to this level. And I thought the first three times, which were emotional bottoms, would be enough to put the lows in. I don't know if the lows are in. I still kind of suspect they are here. You know, the VIX has been below above 30 now for the fourth time since Thanksgiving at each one of these emotional bottoms. It is tough. I don't know if we got more to go on the downside. It certainly would be possible here. But I think we're at peak inflation. And because of that, we're at peak fear. And I think both are pretty close to rolling over. If inflation does roll over, I think fears will ease. And I think that will set up the second leg of this bull market. You know, people are worried that the Fed is behind the curve in treating inflation. But the reality is the Fed's becoming increasingly irrelevant because policies across the board have been in a major tightening mode for the last 12 months. A big slowdown in money growth, a big slowdown in fiscal stimulus, a big rise in the U.S. dollar, a big flattening in the yield curve. And every yield in the economy, except for one lonely interest rate we call the Fed funds rate, has been significantly increased. Why should we worry about what the Fed's going to do with the funds rate when the 1-year yield's already at 2%, the 2 years at 2.65, the 10 years at 2.75, and the mortgage rate's at 5.50? There's been plenty of tightening to slow the economy, slow inflation, and that's why the stock market's been struggling. And I think tightening signal's about over, Becky, which means that we're going to have a soft landing and a second leg to the bull. That's where I'm at least.